Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I'm going to be going through a quick summary, semi-quick summary for how to trade momentum stocks. So I'm going to explain the concept of momentum trading, swing trading momentum stocks this is, give some credit where credit is due, show you how the setup works, the principles, how to find momentum stocks, and then what it looks like applied to current stocks. So let's get into this. The first concept to understand is that there are four market phases and these operate in a cycle. So phase one, or stage one, accumulation, we go sideways, net sideways between a range. Stage two is the markup campaign, followed by a distribution at the top and then a markdown campaign. So the key take homes here is that mostly this is institutional driven. The institutions will accumulate a position in a range here, then they will allow a markup campaign and a stage two advance before offloading and distributing what they bought down here at the top to retail and then allowing a markdown campaign to occur. Here's another illustration, and you can kind of see that we don't really want to be sat in a stock here. We don't want to be sat in a stock here, and we certainly don't want to be holding during a stage 4 decline. This is the golden zone, stage 2 advance, and this is what we're looking for. The concept of momentum trading is we do not want to sit in a stock during stages 1, 3, or 4. Okay, we don't want to sit here, we don't want to be distributed on, and we certainly don't want to be holding through a downtrend. We're going to use a trend template in order to identify a trend. This makes it a mechanical process. We want to try and capture the bulk of stage 2 without seeking perfection. We're not looking to buy the absolute bottom and get out near the absolute top. So do not seek perfection, it does not exist. This is actually going to be the opposite to buying the dip. It's not going to be buying value, and it's going to be the opposite to bottom fishing. So we're actually instead going to be buying new highs. Just before we get into the trend template, the one I'm about to show you is actually from Mark Minervini's books. I think it's from both of these books. So if you're serious about momentum investing, stock investing, learning how to trade breakouts to new highs, then I would highly recommend these books. This is taken from both of those books, I believe, certainly in one of them. I'm pretty sure it's in both. And you can see this is Minervini's trend template. Before you even think about entering a stock, when you think to yourself, this stock has broken out, is it time to buy? First, you can write yourself a little checklist and work through these to make sure that you have a mechanical system and you're not using your emotions. Also, you're free to modify these as much as you want or as little as you want. I have a modified example here. So you can say to yourself, you get yourself a little notepad, that's what I've got, that's what I've been using. And I say stock XYZ is going to break out. Or that's what I think. And I say to myself, okay, well first let me check. Does it meet 1, 2, 3, so on and so forth? Is the price above the 200, the 150 and the 50 moving average? If so, tick it off. So you can use this for yourself and then just go through and say, I'm going to buy, or I'm thinking of going long Apple shares, for example, and then work your way through this list and say, is the price above the 150-day moving average? Is the 150-day moving average above the 200-day moving average? And only if you can tick all of these off, should you be entering the position. If you're in the UK, you can ignore this. You can ignore this one in general. You don't need this one. So I've got a dollar chart here, and the reason for that is this really beautifully illustrates what buying a momentum stock would look like. I know this is the dollar, but you'll see what I mean in just a minute. So if I go back a bit here, you can see we've had a lead in from a stage 4 decline. Then when we get down the bottom, we have formed a range, right? So I can define this range here. So you can see a lead in, then we form a bottom and we move sideways. Doesn't this look exactly like this? We've had a markdown into a range at the bottom before a markup campaign. And so then we break out here, as you can see, a little fake out, and then we go. And so at the time of breaking out of this base, of this accumulation phase, you can enter a long position and look to ride the position up. And so in addition to entering a long position, you want to make sure that this stop is sized to 1 to 2% of your account. As the stock moves up, you can draw boxes every time we form a base. What you'll notice is the price moves up and forms a base, and then moves up and forms a base, and then moves up and forms a base. And every time it does this, You want to be buying as it's moving out of the base, as it's emerging from its base and moving to new highs. And so finding momentum. The first step is to build a list of stocks in stage 1, accumulation phase, and set alerts for breakouts above the horizontals. Size all your trades so your stop loss is 1 to 2% of your account, and don't be deterred by stops because it often takes multiple attempts. So if you have to give up 1%, that's fine, and then you get in. Give up 1% perhaps if you were entering here, and then you get in, right? So don't be deterred by stops. You can also use screeners to find stocks that match your trend checklist, or you can use a screener to search for stocks that are just making fresh 52-week highs. And you can also look at the winners board or the biggest daily gainers. And just as an example, if you just type in something like the index you're interested in, so the FTSE 100, top 20 fallers or risers, then you can come over here and hit the risers tab. There are dozens of websites that provide this service, and it will tell you what stocks are making the biggest gains today. So this is another way to hunt down momentum stocks to add to your watch list. So what does this look like applied to current stocks? Well, at the time of recording, the Dow yesterday was off over 550 points, I think. So when the major indexes are pulling back, when stocks in general are pulling back, then of course momentum stocks are going to struggle somewhat. But if these are a true list of momentum stocks, or at least if some of them have potential to produce super performance, then of course nothing can produce super performance without continuously taking out its prior highs, right? Without continuously making new highs. So if you click on any one of these charts, then at first glance, it's quite easy to say that you probably would feel uncomfortable buying these, right? Most people prefer to try to catch a falling knife. They prefer to try to buy the bottom. They prefer to try to buy dips. So how can we look at a stock like this and use this momentum strategy to help us identify super trends? The first thing to do would be to look at a stock like this and see if it is truly in an uptrend. So is the current price above all of these moving averages? Are those moving averages stacked on top of each other? So we can go ahead and do that by adding a moving average indicator like I've got here. So the green would be the 50, this is the 150 and the 200. Is the price above all of those? Yes. So we can tick this off. We can say yes, it is indeed above the 200-day and the 150. Is the 150 above the 200? Yes, it is. 150 is above the 200. Is the 200-day moving average line trending up for at least a month? Yes, indeed it is. What about the 50-day? Is that above both the 150 and the 200? Yes, we've already seen that. Is the current stock price trading above the 50-day moving average? Yes. So you can see where this goes. As long as all of these criteria are met, and as I already said, you can leave this one out if you want to, or you can make your own list, it doesn't really matter. But so long as your criteria are met, then you can feel confident in saying that this stock is indeed in an uptrend. So the next thing to do would be to try to identify where the breakout is going to come. So you can move to a weekly chart and you can see this cleans everything up a little bit. This stock has quite clearly been an uptrend for a long time. So the first thing I want to do is to zoom out and show you exactly how this strategy works. Then what we will do is show you how to identify possible new breakouts from these current stocks. So if we go back a while, you can see that this has been in a massive uptrend before a distribution top and a stage 4 decline. Going back here, we only need a box tool. So you can see that we take the highs and the lows of the range and extend this box out until we get a breakout. So an entry here with a stop either below the lows or halfway down would have got us in at the start of the trend. Then it's simply a case of drawing a box here and extending it out and buying the breakout from the box again. So our first entry would have been here. If you were late to the party, we could have entered here or anywhere in here. And if I zoom in on this so you can see what's going on a bit better, even though this was a fake out, putting a stop below the low would have kept you in. But ultimately, as we emerge from the box, we then form another base. So this is simply a case of saying, here is my new local high. I'm going to extend this out until we get a breakout. So buying any one of these breakouts with a stop below the low would have allowed you a slightly later entry into this stock. Now you can see where we're going with this. The principle is exactly the same all the way up the chart. If you find the high and the low and extend a box out, a break above this high with a stop below the box enables you to buy at fresh all-time highs and still capture a big bulk of the move. There was a late stage base, I would argue, occurred here, and again you would have gotten entry here with a stop below the box, which would have enabled you to capture the last blow off 22% of the move. So you can see here that having simply identified an uptrend by using moving averages and a checklist, and then buying a breakout to new highs above a box that I've drawn, can yield super performance in stocks. Now again, we get a distribution top occur. We get this sort of blow off and a big distribution top. Lots of chop. We get a lower high. This would be our stage 3 distribution phase before a stage 4 decline. And then of course, you know what comes next because I've already shown you, right? We go back into stage 1 accumulation. So here is what stage 1 accumulation looks like, and you can see we emerge from the base and go. Now, of course, this would not have been a simple entry because none of this meets the criteria for the trend checklist. This is not an established trend. And so this is why it's important to have a trend checklist. You're not just buying an emotional breakout or an ambiguous breakout, and instead you are making sure that the party's already gotten going. You don't want to be first to the party in momentum. You want to be late to the party, and you want to get there as there's already a party going. And so we wait for everything to be stacked the correct way, a month of uptrend, and then once we've got everything ticked off of our checklist, we can start to apply our box drawing theory again. So here is our box on the weekly chart. A breakout here with a stop below or a stop halfway down would have been a great entry. If you miss this entry, then there's no problem because here we have another box, right? A breakout here with a stop halfway down or below the box would have kept you in for the bulk of this move before having to draw yourself another box on the weekly chart and then buying a breakout with a stop halfway down or below the box. Again, another opportunity presented itself here, and of course another opportunity presented itself here. Now, one thing you'll notice is this chart looks parabolic, doesn't it? Every single time we've drawn a box, if you were just viewing the chart like this with no boxes, would you feel comfortable buying this chart? Would you feel comfortable buying here at new highs? What about here? You'd be saying, no, look at this. This is incredibly overbought. It can't keep going up, but of course it does keep going up. Things can stay overbought a lot longer than you think. And this is how you find super performance. So again, we've got another box. You could draw something like this. So you might have had to take a stop here, but eventually you can get back in with a stop halfway down and still get to ride an enormous portion of this trend for multiple weeks. This is a full 100%. And even if you were later than this, here's another entry. You can see where I'm going with this, right? Another entry. And so the question becomes, how do we apply this to our modern day stocks? Well, we currently are working on producing a new box by the looks of things. So we've got pretty well defined lows here and pretty well defined highs, as you can see. So a breakout here should yield a breakout to new highs. The more bases there are, the more likely they are to fail. The fewer boxes there are behind you on the weekly chart, the more confidence you can have in buying them. Now, of course, you use a stop for a reason. You use a stop to manage the risk, so you must always use a stop, and you must let the stop do the worrying. So we're going to take this same concept and apply it to McDonald's here. We've got a weekly chart, so we can scroll out a bit, flatten the noise to make it seem less insane, and we can start to draw our box strategy. There. Where's the next one? Here. And so you can see right now we're working on another box. So zooming back in, we can see that if we get a breakout coming up, we should stand a good chance at pressing on to new highs. I'll do a couple more of these just to illustrate the point. So again, we're on a weekly chart. We can go through our trend checklist. You can quite clearly see that we're working on a box right now. So is this a potential trade in the near future? Quite possibly. This to me looks like it's just about emerging from a box. So is this a potential long? Quite possibly, if it meets the trend checklist, of course. On appears to be moving up from a box, doesn't it? Having a think about going. So again, possible long entry here. And what's interesting about this is assuming it meets the trend checklist, which I'm sure it does, then this is potentially box number 1, isn't it, for the weekly chart. We most likely got the stage 1 accumulation phase here, the first emergence. You could argue we've made a second base here, and now we're moving into a third base. So a breakout here would likely lead us to new highs, assuming this is going to be a super performing stock. Lastly, if we look at a weekly chart for SIGA, this shows how insane and overbought things can look. But that does not negate the idea that this can go significantly higher. So, of course, we have our trend checklist, which will tell us if we're in a true uptrend. We know to go to a weekly chart and draw our boxes. You can see here that we've got an enormous stage 1 accumulation zone, haven't we? Followed by a big explosive breakout, our first base. So would I buy here? Possibly not. Would I have bought here? Yes. Now it's important to point out that if we get some sort of consolidation here, like this, then you already know where I'm going with this, right? We draw a box to encompass that, and we buy the breakout from this box. So you mustn't be scared in thinking that because this chart has gone up this much, it can't continue to go higher. You must simply have a mechanical strategy that says, if a breakout occurs after a trend meeting my checklist, then that is an execution for a long position, of course, with a stop loss. So that is a simple momentum buying strategy. I hope you have learned something. I hope you can see how to buy momentum stocks, how to find momentum stocks, build a watch list of stage 1 accumulation, remembering to use a checklist to remove bias and emotion, remembering not to be scared of buying into strength rather than to always be hunting for the bottom or buying dips. I hope you found this interesting. Let me know if you did, let me know if you didn't, and until next time, I'm your boy Camel. Take care, all the best, cheers, bye.